Hey everyone, it is Evan here from the Trade Risk on Friday, October 11th, here with a weekend market recap video. We're going to cover all of the major indices, the current market environment, and finish off looking at some sector analysis. So we got lots to cover. We're going to jump right into our dashboard here. It was a pretty action-packed Friday right into the end of the bell. We saw headlines hitting the tape, causing the market to, kind of zigzag a bit into the close, moving reasonably covering a good amount of range there right in the final 5-10 minutes of the trading session. So we're going to cover that. We're going to look at this week's rally. You can see that we did finish higher on Friday, up about 1% across the major indices. We were up greater than that, but we did get a bit of a fade there into the end of the day. We can see the 5-day change numbers in positive territory. We are starting to reclaim some of the shorter term and even midterm moving averages across the major indices. And if we scroll down a bit further here, you can see the sectors that took us higher this week were the Dow transports, materials, and industrials. And on the downside, it was a underperformance by the very defensive tone of the market, so utility, staples, and healthcare. In terms of major markets, oil finally caught a bid this week, up 3.4% over the past 5 days, followed by China and emerging markets. And on the downside, we had volatility, we had natural gas, and we had TLT, all lagging and closing lower by about somewhere between 8 to 4%. So let's jump into the charts here of the S&P 500. This is where we like to start our analysis. And, it looks like, I don't know if I'm getting a delay here. I'm recording this about 5-10 minutes after the bell. I'm not sure if the S&P chart here in WORDEN TC 2000 has updated. Let's take a look here. So that's the SPY. If I take a look at... Yeah, so if I'm not mistaken, the S&P 500 should have closed, or it looked like it closed around 2970 or even slightly below that. If you look at the SPY here, you're getting a pretty good looking, if you want to be technical, kind of a gravestone doji, which printed today. And if we're looking at the cash market, we don't see that settled in right there yet. So we'll look quickly here, or we'll actually just use the SPY ETF in this week's initial analysis. So if we look here at the SPY on a weekly time frame, you can see we did finish higher, 65 basis points here on the week. This was after a pretty rocky start to the week. We were initially selling off. We got as low as about 290 or 288 in change here throughout the beginning of this week, and it really looked like kind of a bleak case and a sort of an immediate failure to hold the recent rally from last week. But that, of course, turned around into the end of the week. Thursday, Friday, we got this nice rally that took place and pushed us back into positive territory and back above this highly watched level that we've been kind of staring at on our charts now for a while, the top end of the August range, which comes in around 294 to 295. We closed back above it, and we closed above last week's close. So this was a good win here by the bulls. It was obviously again a slow start, kind of slow played their hand, but we got rescued here at the end of the week, and we closed above what I've been looking at is a pretty important mark here, this 295 area on my S&P chart, cash market. I've got it drawn really this band here. I don't want to be too precise, but just generally speaking, that was kind of the upper band. And on the lower band, in our midweek video, we talked about essentially saying the last week's lows to the August lows somewhere down here. This was the range that we were kind of in and chopping around and looking for sideways movement, and how quickly that has changed because we have already now kind of rallied and attacked the upper end here of this range and looking like it wants to continue. But just like last week, where we had this nice enthusiastic rally to finish off the week, we really are going to need to see follow through. It's kind of the same comments as last Friday's video. Frankly, price structure hasn't changed all that much from week to week. We essentially just bounced around and chopped people up this week, and we closed just slightly higher from where we were last week. So, from a technical basis here, we're still kind of sitting in the same exact zone. You could look at this as sort of a trend line here that's still, kind of on the cusp of trying to break out. This could be some type of nice little pullback flag that has developed here over the past month of trading. And now we can, springboard and start to make our run on all-time highs. That, of course, is the bull scenario there. That's why we're going to want to see follow through if we are in that bull camp. Now, the opposite end of the spectrum is that we pull, basically what we did the start of this week. We immediately fail here at the open next week, and we start to fall back into this August range. If we go down to a daily chart and we clear up some of these lines that we just kind of put on here, this is or at least let's clear this one out here. And if we look here at the SPY and we look at this kind of trend line that we just put on there, you can see we tried to break out this Friday. We tried to gap up and effectively just run, but that ended up failing here as we retraced the bulk of, or pretty much all of the intraday progress and closed right at the open, giving us that gravestone doji type of look. And if we're familiar with the Japanese candlestick, the gravestone doji, that is a bearish candlestick. Of course, it still needs follow through, but it doesn't have, quite, bullish implications by itself. It in fact tells us that price has been rejected, and we are looking to see if sellers are about to essentially take over control, at least in the short term. So with that in mind, perhaps on deck next week is some type of kind of gap fill down here, some type of pullback into this 294 zone, which is our critical zone. And if we can hold in here, so a really, kind of neat path for the market would be is if it kind of starts off next week, with a slight gap up, slight gap down, whatever the case is, but essentially does this pullback in here, kind of checks back to Thursday's range. And then if it can start to, kind of dance around there and eventually start to lift up, do some type of kind of back test and then a breakout move, that certainly would be a great path, a nice bullish path for the market. It would certainly make it nice for us technicians that are looking at clean levels to manage risk against and to measure our entries against. So that would, of course, be the bull scenario, but we'll need to see how this unfolds next week. The bottom line is we did get above, if we look at the, again, that cash market, if I go back here, we did close above this 2950 zone, which is what we've been talking about for a while. Let's see if we can hold it. Let's see if we can get some follow through, and we'll see if we can start to hold above that August range. Now, if we go down to the VIX here, we take a look at volatility this week. You could see it was a pretty good unwind here, back under 16. Remember, at the beginning of this week, we were flirting with 20, north of 20 here in the VIX. So we really got a nice kind of sell off there into Friday. Again, we'll need to see if we can stick and if we can continue to keep this market bid at these recent levels. So that is the S&P 500. If we look at the Russell 2000 here, it did have a good, net percentage gain here on Friday. You can see a pretty wide candle, pretty loud range here from today, but it was up 1.69% here just alone on Friday, trying to clear back above kind of the bottom end of this range. Again, structurally, we sort of talked about this here, saying it's pretty much in no man's land, just going sideways. It's at the bottom of this range here, and it still just has a lot to prove in it now for the Russell 2000. And maybe that's kind of general consensus now. Maybe we've all given up on small caps and say, they're just long forgotten and, have plenty to prove. And maybe this is the kind of the best time where the rally starts to really set in. So keep an eye on them, but just generally speaking here from relative strength point of view, they're still lagging on that intermediate term basis. The Nasdaq 100, this was what we talked about last week, is really what we wanted to see as the leadership for this market. If we were going to get that upside follow through, we really wanted to see the Nasdaq start to take control here because they were sort of best set up to do that. You can see we did get that gap up. We did get that fade though, giving us a good fade of that intraday range. But we are back above the August range. We're starting to move above this this consolidation. So just like our analysis here for the S&P 500, maybe a little back, a check back here early next week, retest, and then kind of move to the upside. And suddenly this could look pretty strong here going into the end of October. So that is the landscape here overall for the market. It was a very seesaw, volatile week, but bulls ended up kind of saving into the end of the week. And then, of course, with the fade, it's a little bit of everything for everyone this week. So hopefully you've managed that volatility well. Again, doing less in those types of environments certainly can be a lifesaver to not get chopped up. So with that said, let's get into some other markets here. We got TLT, which did get hit pretty good here this week, down almost 4% for TLT. These ranges have really expanded over the past month and a half of trading. So, 3-4% moves in TLT are starting to seem pretty normal. Look back 5, 6, 7 months ago, we weren't moving that big in TLT. The ranges just weren't that high. So we still have a lot of action going on here in TLT, lots of volume still coming in above the weekly average, but we took out last week's lows. If we look down here, you can see that we did sell off down to that 140 area, high volume. So overall, kind of consolidating here. Bears have the trend in the short-term momentum kind of pointing to the downside, but overall, it's still pretty much a sideways pattern here since mid-August. If we go to gold next, you can see that kind of a similar pattern here since mid-August. We're still going sideways here. There's pretty much no trend. It's just sideways, and we're really waiting for some more directional bias there. Silver, same thing. Late August started the kind of pullback off of the highs. It's been kind of flagging out and consolidating as well. So it still looks, all of these three markets still looking like they need some more time. They're still trying to figure out which way is going to move for the sort of intermediate term outlook there. If we go to energy next, we got USO, which did finally kind of stabilize this week. It did get a 3.5% rally. It was an inside week for USO. We had a pretty bearish, loud sell week last week, but we did hold on to the bottom end of this range around 1070. We are bouncing back up into the middle point. There's a lot of supply traded in here. So again, sideways market, really just kind of a shorter term trader's dream at this point, but intermediate term here, swing basis, position, trend following, there's really not too much to look at for USO. Last but not least, for energy is natural gas. This is trying to stabilize here, but it's still struggling. You can see it had that very loud high volume reversal day back on the 3rd of October, had a quick bounce, retraced, and now it's right back to these lows here. So it seems like it's a good spot to hold, but still has still more to prove. Lots of volume coming in, so it is something that's getting the attention. There's transaction going on here. There's volume. There's eyes. But now we just need to see if that trend can start to turn around here and make some type of bottom. So that is it for major markets. Let's jump into the sectors this week. Let's take a look at what performed and what didn't. XLB, this was the top of the list here. 5-day performance up almost 2%. Chart is still pretty messy. There's not too much excitement here. It basically held at a spot that it's been holding for the past, I guess roughly approximately the August lows. It came all the way back into them. It started to hold around that 55, 56 area. It got a nice bounce here into the end of the week. In fact, a little bit of an island bottom. We'll see if it can hold. Not a true one, but something that resembles it anyway. Looks like we get almost a little bit of a fill there, but kind of interesting here to see the gap down, the slog around 55, 56, and then the immediate kind of snap back up here. So XLB, something to watch, maybe some type of other hidden inverted pattern here, but that'd be pretty sloppy. But XLB, top of the list. Semiconductors, SMH, briefly making new all-time highs today. In fact, not quite closing highs either, but certainly intraday new all-time highs were set by SMH. That was impressive here. This is what we talked about last week, was we wanted to see the semiconductors lead, and we sort of mentioned how they were set up best in class, sort of best in breed here last Friday in our last Friday's market recap video, and you can see this did end up breaking out here. We are starting to get some traction. Of course, we get the fade at those highs, so we need to see if we can get some more conviction here, but semiconductors certainly look like a place that want to continue to help support and lead this market. Last but not least was industrials. Industrials kind of, again, it's a nice snapback here. Doesn't really change anything structurally. This has been going sideways since February of this year. We're still sideways here. We're moving to the top end of the range, so really not much else has changed. On the downside, we had utilities. Utilities here, though, just pulling slightly off of these all-time highs, consolidating, looks pretty healthy. Trend is still to the upside, so I wouldn't count those out. XLP, same thing here. We're just pulling slightly off of the all-time highs, more so consolidation through time, so keep an eye on defensive areas. And IYR, really, this is the third underperformer this week, down just slightly here on the week, but you can see it's just, again, off of all-time highs, and it's just kind of moving sideways here. So it was a bit of a, kind of a risk rotation week, and some of the prior leaders, which are these defensive tones in real estate, which is in that mix as well. They've been really, just kind of grinding to new highs, and really we just got a slight pause in their trends this week. So that is it. That is what I got. Lots of movement this week, but all in all, bulls trying to get the job done here. We'll see how we can follow this week up next week. We do have earnings coming up, which will be fast approaching, but not yet. We got a little bit of time in there, so as we move through October. So thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube channel. You can follow us at The Trade Risk. Have a great weekend, and we'll see you back here on Tuesday next week for the midweek market recap video.